one of the things we observed last year was a significant decline in trade out of North Asia, excluding Taiwan. Now, that was obviously going on pre-COVID, and a lot of that had to do with both the U.S.-China trade war and also the market in North Asia working off a lot of the inventories from the semiconductor and technology space. That's obviously still a challenge for Korea and Taiwan, and we would expect that to continue. So I wouldn't necessarily describe it as a North Asia versus South Asia story, although I think you're correct to point out that Japan and South Korea still look quite weak. But I guess what we're focused on is there are a number of economies in Asia that have historically been a bit more resilient to global trade trends, and it's because of this dependence on sort of more regional activity. And I guess in an environment like we're in today, that divergence between sort of more regionally focused economies is really starting to show through quite clearly.
Yeah, that's a good point. Eric, another thing you've been looking at really are the trends when it comes to what we've seen around the world where governments increasing debt issuance and the overall debt to GDP ratios are rising. But how does Asia fare in this relative to the rest of the world to the extent that it could, if you will, put a brake on some policy responses going forward if growth doesn't improve significantly?
Well, look, it's a fair question. I guess the only good thing we can say is that every government around the world is experiencing or implementing a significant increase in their debt to GDP ratio. So it's hard to say that one country is surviving or managing this significantly better than others. But I guess the key point for us is that inflation remains extremely low. And that's very different from where we normally are at this point in the business cycle, which is to say at the latter stages of it. And the reason that's so critical is, normally when you get to this point in the business cycle, you have high inflation and central banks are forced to tighten monetary policy. And that really puts, the brakes on growth pretty aggressively. This time around, we're obviously having a growth crisis. But the low levels of inflation and therefore inflation expectations is actually giving a number of the emerging market central banks more policy flexibility than they normally would have. And I think that's one of the reasons the currencies have recovered from their lows in March. So what we're watching very carefully for is examples where the increase in debt issuance may be causing some further weakness in the currency. And that would be an early warning sign that the market is saying, okay, we've had enough and we need to start focusing more on debt reduction.